Hey traders, today in the Strategy Minute, we're going to talk about noise, what it is, and how to stay out of it in the markets. So there are a couple ways that traders look at volatility, because ultimately, like, the noise in the market that I'm talking about is one of the things that really haunts traders, and they don't even realize it. But again, we're seeing this stuff all the time, over and over again. So I mean, this is just my workspace on TradingView because it's a web-based platform. And I'm going to erase all of it, because if you don't know, I want you to pretend that you're coming in completely blind to whatever market you are. You might trade ES, you might trade NASDAQ, you might trade soybeans. I don't know what you're trading. It really doesn't matter. What I want to show you is kind of a down and dirty way to make sure that you're staying out of the noise. Okay, so when I say noise, I mean the random movements in the market on an intraday level. So when I'm talking about intraday level, I'm talking about from I mean, you could call it anytime from 6 p.m. to 4 p.m. the next day. A lot of people call the intraday level more like 9:30 to 4:15 p.m. Eastern time, 8:30 if you're talking about Chicago time. To 8:30 will be 8:30 to 3:15 Central time if you're in Chicago. But you can kind of adjust those numbers depending on where you are in the world. But I'm talking about how far does the market move in that intraday period. So you can use something, and I always say something as simple as ATR. So if you look on the bottom here, you've heard me probably talk about this, because I think this is one of the best down and dirty ways to look at it, where you can do it really quickly. So the first thing you got to do is whatever charting platform you're looking at, you got to change it to 1 day. Okay, on TradingView, you see that I'm looking at ES right now on a daily bar, and then I have ATR here. So if I pull up the ATR for the daily bar on a 20 SMA simple moving average, so this is a average of the last 20 days, we move approximately 100, or so we don't move approximately, we move on average 106 points. Okay, so I see traders all the time come in and trade with 2-point stop or a 5-point stop, and you're trading a 2 to 5-point stop in a market that's moving on average 106 points a day. So what happens when you do this is you become victim to randomness. The market's going to ebb and flow all day. It's what markets do. We talk about fear and greed and all of these things, but the market may move to a destination, and just the way it gets there, it doesn't normally get there in a straight line. It moves and it ebbs and it flows and it goes down and it goes back up and it goes down some more, and then it finally reaches its destination. Now, for a simple rule, what I like to tell people is take this ATR or ADR, average true range or average daily range, and have it on your charting platform for the normal session instead of the full session. This is for the full session, from open in the Globex section, which is 6 o'clock Eastern time in the US, 6 p.m. Eastern to 4:15 the next day. And so it's 106 points. If you want to do it for a smaller time frame, sure, look at a smaller time frame. But just know that if you're trading anything less than a quarter, your stops are anything less than 1/4 of the range, you're what I would consider more of a scalper. So if we have this range right now and it's on average 106 points, and you can see how this has moved up right now because we're in a high volatility point to from 35 points, and before that it was much lower. We can scroll back and we can see where it was in the 10-point range. And you also see that the volatility ebbs and flows. So as the volatility ebbs and flows, I truly believe that your stops and your targets need to ebb and flow too, because it doesn't make sense if the market is dynamic to have a static stop loss and profit target. It makes zero sense. So I take a general rule of 25%, so a quarter of the range would say, like, let's say 25 points. Okay, so if I know if my stops are under 25 points, I'm probably in that scalping, and I'm probably going to be trading signal to signal, which works for some people, but you just need to be aware that if you're not scalping and you're trying to swing trade, and you're swing trading with a 15-point stop, it's probably not going to work. You're probably going to get washed out in the noise. Okay? So, again, take that ATR or ADR, whichever one you're looking at, whichever one your charting platform has, and divide it by 4, and it'll give you a pretty good estimate of where I consider scalping and where you can get caught in that noise. If we want to pull up another chart, just for example purposes, we can see that we're looking at the NQ here now, the NASDAQ. You can see it adjusts 494 points on average. So if you're trading with less than 125 point stop in the NASDAQ right now, you're probably getting pretty close to being in that noise range where the market will just ebb and flow and it'll knock you out of your position randomly. Take your stop. So this is a very, very common problem that I see in the markets, is that traders don't even realize that they're just getting kind of stopped out randomly. And the way to combat that, to wrap this video up, is to make sure that if it's higher volatility and we need to have our stops to be bigger to stay out of the noise, what we need to do is shrink our position size, okay? If you shrink your position size, it allows you to have bigger stop losses and still lose the same amount of money. So if I told somebody that, hey, you can only lose $1,000 in a day, you need to size yourself accordingly. Well, you take the volatility into account, you figure out how big your stop's going to be, and you size according to that. Okay? So if you guys need help with that, or you need that further clarified, please reach out and let us know. I don't want to make this video too long. It's supposed to only be 1 minute. But, sometimes these things are a little bit more difficult to explain. Okay? So please comment and let us know what you guys think, and we'll talk to you guys all soon.